closing 2 trades and netting $60.51 on Adobe and Apple. We're going to talk about that here in today's video. It's been a little bit since the last trade recap video because, let's be honest, there hasn't been much. And so we'll talk about that as well. So Apple and Adobe are the 2 positions that we closed. They were both longs. And if we jump back here, what you'll see is this has been my December. So we had a trade on the 1st of December, 3rd, 4th, 5th, the 6th, nothing on the Thursday, Friday the 7th and 8th, and then today is Monday the 11th, and we have 2 trades. Really, I didn't take any new ones. They were just closed positions that I had on the swings from the past. Now, this Apple trade does stem back to Wednesday the 6th, so you can honestly even kind of call that a negative 102, and then the Apple today was about a $100 loss, was a 113. So here's what happened. I'm going to pull this chart up here in a second. We'll go into the individual trades in a second too. But the Adobe was a full swing closed position. So we realized those gains, but and I'll explain why. But we'll talk about Apple first. So Apple on this one, here's the chart. You know, the trade looked great. And honestly, like it looked good going into Friday. The volume was even there today, which is good, but also, you know, this morning I didn't like it, so I just stopped out of it. Here's my look. You got a bull flag breakout to the upside. Simple as that, right? Bull flag breakout to the upside. The breaking candle was this guy. I got in at 193 on high volume. Great, looked good. Then the next day we come back down and pull into 192.20-ish, a little under there. And I stopped out. Should I have stopped out? No, but I stopped out. For whatever reason, my mind was like, I don't know. I don't like this. And so I stopped out. Little did I, and then I got back in that same day because I then realized, wait a second, volume is super light. I shouldn't have gotten out. That's why today I made the decision to get out with a bunch of other factors in play. So if you go back in time here, you have this 113 loss, but the 102 back on Wednesday was from that original, the only red day of the month was from that original stop out. And then I re-entered it. Now, pop myself back up on the screen here. So I got back in and then it pushed higher and let's be honest, like this looked good. Like it looked good on Friday. Here was my kind of contemplation on Friday. I'm sitting here saying to myself, well, the chart looks good. If I'm going off the chart, there's no reason to sell this thing. If I'm going off of what I think may happen, there maybe is some reason to sell this thing and just lock the gains in and move on. Now, the reason why was because my ultimate target was actually up here at a new all-time high, or at least, you know, pushing up into that area. And my stop loss was originally 190 on the breaking candle low. We've never tested 190. We actually got close today. We were about $1.50 away, $1.40 away from that level. And as we got under 192, which was essentially the lows of last Wednesday, that's where I stopped out. Because at that point in time, it's too close of a play going into CPI. We've got CPI on Tuesday morning, pre-market. Now, do I really think that CPI is going to be a massive, massive market-moving catalyst for tomorrow? I don't really think it is. But it could be. And so I can't assume anything. I think. And so my thought process here was, if we're anywhere near or under 192, we're too close for comfort because we could, in theory, gap down big enough to where we, you know, gap down underneath that level, and then I lose a lot more than I was intending to lose on the trade. So that built into why I ended up getting out today. Not to mention, you know, you had a really good look, and then that kind of just broke down like today. Now, overall, I guess big picture, the original stop was 190. This may never get there. It may end up going for a massive move. If CPI is positive, who knows? You don't know. I can't say. I'm not going to sit in this thing and, you know, end up losing more potentially than I need to, because there'll be plenty of setups and opportunities, you know, on the backside of CPI. So that was the thought process there. Nothing crazy inside of that Apple trade. And the Adobe trade, I'll talk about this one. We netted a total P&L of $321 on this swing trade. This was initiated a while back. You can see that the initial entry was back here on the 10th of November. So about a month long until I got out of this trade. It looks good. Let me tell you, it looks good. Like it looks like it can go for more, but here's the problem. Same thing, right? You have CPI, so you have an unknown. And then at the same time, guess what you also got in Adobe coming up? earnings. I will not swing through an earnings report. Doesn't matter. Not going to happen because I don't know. So earnings is Wednesday, CPI Tuesday, PPI Wednesday, earnings Wednesday for Adobe, Powell on Wednesday. There's just, in my view, there's just absolutely no reason to hold. I had a half position left. There's just no reason to hold that half position through all of that. So I said, you know what? We're going to call it a trade. And that's what we decided to do. Could this trade have been a bigger trade? Yes, but we ran out of time because I will not hold through earnings. So that was it. So those are the two trades there on that. Now back to the dashboard. I want to just give a quick little thought on this. I'm not sure how much more is going to go down in the next couple of days. We have PPI, CPI, PPI, Powell, we'll see what happens, but I think by the end of the week there'll be better clarity. But right now, just not really sure I'm liking, what we're seeing. However, here are the stats. We're currently up 525 for the month on 8 trades. We have 2 open trades remaining. One is a Bitcoin trade and one is a Meta trade, which is pretty small, but it's hasn't hit stop loss, hasn't it take profit, so it's kind of just in between, right? But it's far enough above a stop loss where I'm fine holding it through CPI, so I'm leaving it. And then Bitcoin, I've locked in 60% of the trade, so I've moved my stop loss to now above break even, so I'll lock in a few extra bucks if it hits the stop loss, or if it goes to my ultimate target, I'll lock in a lot more bucks, I guess. So that's the plan on that. And we're just kind of sitting back. So right now we are averaging we have a 50% win rate, believe it or not, even though we've got way more green days, but there's some red trades in here, as you saw today. But a 50% win rate, our average win loss per trade, right, is a 3.42 multiple of that, which is awesome. That's a great sign. So this is the highest I've ever seen it. Now, of course, we're only, less than halfway through the month, so I'm assuming that number is going to come down. But it's still great, which means what you're showing, our average winner is $238. Our average loser is 69.6. That's great numbers. At a 50% win rate, give me those stats every single month. More so a month. I don't really care about the week. Give me that every month and I'm happy. Check in on Surge Trader. This is the prop firm that we are doing this on. Couple things I want to mention here. We are currently sitting at $51,758.79. This is 35% of the way through the growth target of $5,000. Now, as you can see, if you were to compare this to go back a month or go back to the November trade recap, the average winner loser was different, right? You seemingly up the size, but it's not really that. It's more so that the trades were kind of just working better. And so we were taking some profits and then they were going to second profits and third profits, and then, scale outs were occurring, which was allowing the winners to be a lot larger than the losers. And that's really what was happening. So there'll be a period of time where, we have maybe a lot of stop losses get hit, or we hit take profit 1 and then it comes back and stops me out in the rest. And so the average win loss will come down, I would imagine. But with that said, this is where we're currently sitting at. I inquired about potentially moving to a 2-phase audition or something along those lines. You can't do that. I have a 1-phase, which means there's a trailing drawdown. However, my max drawdown limit is now at 47,683, which means that I cannot fall under that level. I cannot fall under 49,000 today, which will probably not happen, which will not happen with my stop losses in place. But I can't do that in today. So hard breach is a 5% daily loss, and then the hard breach is also an 8% max trailing drawdown, which is a pain because if you have got unrealized gains, you could kind of draw back down, which is a pain on some of these prop firms. But my high water mark, technically speaking, is set at 51,683. I think that's realized gains. I think I unrealized hit higher, so that's fine. But what I will also say is that when you do achieve the profit targets and then you eventually take your first profit out, I was told that you will then lock in your drawdown at a specified value. So depending on how much money you pull out for profits and whatnot. But once you take your first profits on a funded account, you lock in your drawdown. So the trailing drawdown's only a problem for the audition phase and then right after that. But then once you get past that first withdrawal, you lock in and then there's no trailing drawdown. You just can't, your account can't go back under whatever your drawdown number is. So let's say you're locking your drawdown number at like $49,000. If I can grow the account to 55, 58, 60, I now have, let's say at 60K, I now have an $11,000 cushion, which is going to allow that scale up process to be a lot faster versus having to deal with the trailing drawdowns and stuff. So thought that was going to be a problem. It's likely not going to be a problem. So we'll kind of just inch that size up a little bit. And I think if, we keep these kind of numbers in gear, we'll get there at some point in 2024. We'll hit that target, and then we'll be off to the races ideally as we scale up the strategy, which I feel, comfortable with right now. I feel like we're operating pretty well. And we're learning a lot about it, I think, over the past couple of months or couple of weeks months, I shouldn't say weeks, but we're approaching, really now, it's been about a year that I've, really kind of focused in on trying to day trade more. That is now kind of switched towards a hybrid day swing where I just like taking trades on the larger time frames, and many times those larger time frames allow for big moves and things to play out. So for example, in Adobe, right? We got in on this trade back in here, and this thing took a long time, but look at that move, right? It's a beautiful move, right? So that's where we're currently sitting. That's the mindset. That is an update on the total account, all that great stuff. But so far, realized gains on the month of 525. Last month was somewhere in the 100 area. Month prior to that was like 13-ish. So you can kind of see where we're just kind of chipping and chopping away. And that's where we're currently sitting at. So thanks so much for watching. I'll leave links to TradeZilla where we track all this stuff down below this video. And I'll see you guys in the next one. Peace.